Hello everyone, welcome back to another trading session. I want to go with the buys right now. As you can see, we are at this support area. The candle actually closing exactly there. And if you look back, it's not a normal supporting area, okay? It is a double bottom, right? Just like that, okay? It's a double bottom and then it starts to go up. And if I go to the lower time frame, you will see this even more clear. See this double bottom right here? So this is a reversal basic market structure pattern, and this is pretty strong. We are exactly closing there. We get the gap down right here. Okay, that's another reason. So basically, if you want to take a buy and you see this candle jumps down, it's a confirmation to take the buy. If we close this as an inverted hammer, I will take one more time. No, it's not. Also, if you look at here, we have red-green pattern, okay? So based on red-green pattern, we can have the next candle as a green one. That's why we took this trade. And yeah, honestly, I would take this if this candle was an inverted hammer like this. I would take the next candle with the buyers. Again, we have this gap down, but this time I'm not going to take it because, again, red-green pattern might work here. And as you can see, it's just working. I'll just move on to the next pair and you'll see. Okay, look at this. This kind of trends are usually blind trade. For example, if I take the next trade, you know, sometimes we just lose these trades. I don't know why, but this kind of trades just, I don't know, I don't like them. I never trade them. Okay, this looks obviously an uptrend again, but if I take a trade here, there's no setup actually, so I'm just gonna avoid it. Here we have a QM area. This is my QM zone. Basically, when we have an uptrend, break the previous swing, this makes this QM zone. Price goes up and then reacts from it. So this is the QM zone, but there's some certain confirmations. For example, at the 3-minute time frame, we should have the engulf, which have in this case, the zone should be inside of engulf. If the zone is here, it's invalid. And now, if I go to the lower time frame, step by step, I don't see anything here yet. We want the entry somewhere here. We want a fresh supply area. Okay, there's not a fresh supply area. There's one up here. Let me just see if we can have one. All right, we have a fresh supply exactly at the middle of the zone, and this one, I'll just mark it. The price comes up here fast as possible. I will take this trade with the sellers. The moment touches here, I will enter the trade. Also, we have this trend line, which makes this even stronger. Okay, the intersection area usually has the most power. If you want to, you know, if you're lucky, the price comes up pretty fast to this area, boom, it will reject like this. You can enter right here, but make sure you're in flag mode. We always trade with the flag mode, and the third part of the flag mode should be on 0 if you want to have your trade close exactly with the candle close. That will help a lot. Okay, this QM, this is another QM. As you can see, low, high, low, low, high, high. Price is reacting from that. This QM right here, it's going to this QM. Here also we had this QM, see? So it always happens. It always happens. And yeah, we'll see that. Okay, let me just see. This is another QM, see? High, low, high, high, low, low. All right. I want to take a sell right here, but I will enter with margin of safety. Okay, it means that if it goes up, I will enter. Okay, let's get it. Oh no, it's okay. I take this trade because we're still in this red-green pattern. But here's the thing about this. If you look at this, it's another form of a QM. See that? So this area will be a point of interest for me, for the buyers to get into the market. Okay, this area, it's a QM area. If we go to the lower, and this is the engulf. Okay, obviously the higher time frame engulf. The QM is going to be in the lower time frame, as you can see. Yes. And the engulf is in the 1 minute. Okay, so this is the QM area. If the price comes down somewhere here, I will take a buy, to be honest, but I will go small. Okay, it didn't really come down. I will wait for this one to come down a little bit, and then I will go with the buyers. Please come down. I want it to enter exactly at the QM area. Come on. Okay, I want to take a very small one. Let's go with the bad entry, obviously. Okay, this is a very small trade, just to relieve myself. But it would be very nice if this one coming down. Alright, what was that alarm? Okay, anyways, it would be very nice if this one was coming down and then it would jump up. Okay, look at that. We also have this gap down, right? So again, we have multiple confirmations to take this trade. Go back to 1,000. All right, I'm not taking the sell anymore right here because you see this, the price, where the price is coming from. Okay, usually if your price is coming from a QM, okay, it's risky to go against. Okay, this is a QM buy down here. The price is coming from QM, just try to go in the direction of QM. Okay, because going against it can make you lose a trade. For example, this one would be against the QM. I wouldn't take it. Right, let me just go to the other pairs. Oh, look at this one. Okay, now this trend line is not valid anymore. If the price was coming up somewhere here, it would be valid, but now it's not just valid anymore. My entry is still this. Let's go. I entered right here, but I go with 500, as you can see. Yeah, that would be awesome if this was closing somewhere here. The trend line would add up and it would be a nice trade. One of the ways that you can really manage your risk is being dynamic with this one. It's called dynamic risk management. Yeah, just play around with this when you have a lower probability trade, just to make sure that you lower the risk. Like sometimes you just want to take a trade just to kind of don't miss it out. Doesn't matter how much you make, how much money you make on that. Just take it very small, okay? All right, that was a winning trade. If you look at here, we also have the gap up again. Okay, I want to explain this for you because gaps are so important, right? Let's say you have a buy setup down here, whatever buy setup it is. Okay, let's say it's a support area and the candle is basically breaking. This is a break. Let's say this is a breakout setup. Okay, breakout setup. You know that this is a breakout setup. We can go with the buyers. We have first touch, second touch, third touch, higher high. So this is a breakout setup, right? And also we got any confirmation that we can, and we really want to take this trade. Okay, the moment the next candle opens, okay, you look at it. If we open with the gap down, okay, it's a confirmation for us just to take this, and the candle usually very big. okay, because this is a positive confirmation that this gap up is giving us, okay. But if it opens with a gap up instead of gap down, it's a confirmation that the price will go up and then it will usually reject and close against our setup. And it means that if we were going with the buyers, you would lose, okay, we would lose this trade because of this gap up. So you need to be extra careful when it comes to gaps. For example, here, gap down would make us lose this trade. So we have to take it even smaller. All right. We're trying to make money, right? So we need to be careful as possible. And we need to put into the work everything we know about the markets, right? So pay attention to the gaps. It's also same for the sellers. Okay. If you want to go with the sellers somewhere have a setup. Okay, this is the green candle, let's say. Green candle. And then the next candle opens up with a gap up. Okay, this is a confirmation that the next candle will come down. Okay, this is a positive confirmation for the sellers. But if the price was starting from, with the gap down, is for the buyer. So we need to be careful, and maybe we should avoid going with the sellers. All right. Yeah. See, the market's basically just switching between the QMs. This is the beauty of candlestick market. Look at that. I will detect so many QMs for you, but the thing is, we would not trade all of these QMs. We always want clear setups, right? If you look at here, there's just so many QMs. I will mark every single one of them, and I will just show you, okay, on the live chart, where and why they have reacted. This is another QM up here. Okay, so you see, low, high, lower, low, higher, high, came down, it reacted from this one. Okay, it has created this one. It reacted from this QM. Again, it reacted from this QM. Okay, it went up, came down, it created this QM down here. Pretty much reacted from it. And again, it created from this it reacted from this QM, and now it reacted from this QM that we have marked, right? So basically the market moves like that, and now the next QM that market will react is this QM down here. Okay, low, high, lower, low, higher, high. Obviously this is another QM, it will react, as you can see. Let's just check the confirmation. Each of these QMs can have confirmation. Okay. In this case, we just want to see an engulfing pattern. I don't know if we can consider this. Let's say this is an engulfing pattern, right? And then we go to lower time frame to find the demand area. Simple as that. All right, this is basically the demand area. I actually have taken today's trades. I might take a very small one. Okay, we have the demand area down here, okay? But this one also could work. Yeah, this is the bigger one. See, it's reacting from this one. Basically, the higher the time frame is for the demand, okay, 30 seconds is going to be stronger compared to 5-second supply. Right, so if we were taking this trade exactly right here, it would be a winning trade, this one. Okay, and this was a live example of QMs. It's one of the greatest setups. Yeah, I'm gonna stop right here. I hope you enjoyed. 4 trades just enough for me, and I'm happy with it. Thank you for watching, everybody, and peace out.